Can the silver price go to $300 an ounce, as some have speculated? Let's face it, talking about $300 silver is way more sexy than $30 silver. And that's the point I'm going to try to make, is that $300 silver is great for headlines, but bad for the world. Forget about $300 silver. Here's Robert Kiyosaki talking $500 silver. If you're not familiar with Kiyosaki, he's the well-known author of Rich Dad, Poor Dad, a best-selling book published in the 90s about money and investing. Here on Twitter he says, I believe US dollar will crash by January 2023 after Fed pivots. Well, January 2023 came and went, and the Fed didn't pivot. In reality, they kept tightening right up until now, in May. Economy is too strong. Job market is too strong. Not enough people have lost their jobs. The Fed may have to raise rates even further from here. No one knows what's going to happen because we live in an age of uncertainty. That's the problem with trying to make predictions on silver prices. Even someone as savvy as Kiyosaki will usually get it wrong. But no one will remember all of the times he was wrong. Here he is again in February 2023, immediately after he got it wrong on the January Fed pivot, saying again $500 silver and putting a timestamp on it this time, 2025. 2025 is only a year and a half from now. $500 silver is not happening. Now, I'm not trying to bash Kiyosaki. He's very successful. There's no questioning that, but a large part of that success is in this one thing, attention. And mind-blowing headlines is a great way to get attention. I think it's reckless. Once silver prices start moving higher, and I do believe they'll go much higher, the FOMO crowd will pile in at $40, believing in that $500 price. On any pullback, they'll dump it and lose money. Okay, let's get back to our $300 silver price. The idea of $300 silver goes something like this. If silver goes back to its historical 15-to-1 ratio with gold, and gold spikes to $5,000, then woohoo! You've got $300 silver. Here's why I believe that $300 in today's money, and that's very important to keep in mind, in today's money is not likely to happen. As the currency is debased, then yeah, eventually $300 and beyond. Let's look back to the highest price silver ever hit. That was in 1980 when silver spiked to nearly $50 an ounce. Adjusted for inflation, that's $160 an ounce, and silver hasn't come anywhere near that price since. If we look at what happened in 1980, it tells us something about price spikes in precious metals. The US government doesn't like it. There was a lot going on at the time, but the primary catalyst for the spike in silver was the Hunt brothers. If you're not familiar with this story, the Hunt brothers were a wealthy oil family who attempted to corner the silver market in the late 70s by buying up as much silver as they could, on margin, and at one point controlled up to 30% of the world's silver supply. That $50 was a spike, not a plateau. It didn't hover there for a while and then drift down. No, it was a crash. And what caused that crash? None other than the US government. In 1980, the United States government implemented new regulations to prevent the attempted cornering of the silver market by the Hunt brothers. Specifically, the Commodities Futures Trading Commission, CFTC, implemented new rules that limited the amount of silver that could be purchased on margin. Margin trading involves borrowing money to buy an asset, and it can amplify both gains and losses. The new regulations limited the amount of silver that could be bought on margin to prevent investors from taking on excessive risk. In addition, the CFTC imposed position limits on the amount of silver that any one investor or group of investors could hold. The new regulations were aimed at preventing any one group from gaining control of the silver market and driving up prices. These new regulations were implemented on January 7, 1980, just as the price of silver was nearing its all-time high. The regulations caused panic among investors who rushed to sell their silver holdings before the new rules took effect. This led to a sudden drop in the price of silver, which fell to around $10 per ounce by the end of the year. Again, just to summarize all that, the price of silver spiked to an inflation-adjusted price of $160 an ounce. The U.S. government stepped in and crashed the silver market, and the price hasn't even come close to recovering since. Silver is a relatively rare element that is essential for modern living. It's used in everything, especially in electronics and things like EVs and solar panels. There simply is no substitute for silver that doesn't come at a loss of efficiency and greater operating costs. It doesn't seem likely that the government is going to allow a 10x or 15x surge in the price of silver. The government could introduce new regulations or use big banks to sell silver in order to drive down the price. Any mania-induced spike to $300 would be met with swift action, in my opinion, to crash the price, just like in 1980. The only way, in my opinion, you get to $300 silver in today's money is if the economy is in turmoil. Or let me put that another way. The economy is in a state of collapse, whereby the U.S. government has completely lost control and is unable to intervene in precious metal prices. That's why I don't get excited about the prospect of $300 silver. I'm okay with silver at $50 or even triple-digit silver. $100 is my crazy number. This is in line with my balanced and boring strategy of investing, which is simply to accumulate and don't worry about price so much.